What's up, everybody? Ted here with Bodies and Wicks. Got a new microphone if you couldn't tell, so I'm going to have to be right up on it because this is one of those ones. If I get too far away, you cannot hear me. Maybe you could hear me, I don't know. But you can hear me a little bit better if I'm up close. So, anyways, what we're going to be talking about today, I'm going to go back to the same three Bitcoin, Ethereum, and Monero. Why? Because I think those are the three barometers that tells us what's going on in the crypto world. Of course, Bitcoin being the biggest, Ethereum being the first to be the smart contract, and Monero to be the first to be the stealth cryptocurrency, if you will. So I think all three of those have a huge impact on what the prices can be and what they will be. And I think we've hit the bottom. If not, we may have another retracement to not too much lower. But I'll be going over that, and we'll get to it in just a second. All right, now that we're done with the intro, um, so like I said, we're going to be talking about the same three. This is regarding smart money, right? As you can see up above me, it says smart money theory for technical analysis for financial markets. Smart money is basically the theory that put yourself in the position of somebody that holds all the money, right? And you were taught a specific way to trade, right? Like let's say you were taught to put on trend lines and to follow the trend line and to trade where the trend line goes, or to put bull and bear flags and you expect it to go that way for the bear and the bear flag, or a triangle or something like that. We throw all that out the window. So if you were one of those people that are taught a specific way, uh, and if you want to listen to my video, please do. I suggest that you do because I've been trained on this for over a year, almost 2 years now. And this has worked for me. I went from being in the negative, being trained the old way, going through a private mentorship with Inner Circle Trader, and now being in the positive. Even with all of this, you know, downfall of what's going on, I act as if the cryptocurrency market would be a forex market, to where you trade futures, right? So the futures, you can basically make money as if it's going up, or you can make money as if it's going down. All of that is going to be based on basically the formation of the waves, the things like that. There's a lot of vocabulary that goes into it, such as fair value gaps and breakers and order blocks, and that all depends on the algorithm that's in play. Yes, there is an algorithm that's in play. The people that control these markets know the algorithm, and that's why they do what they do, and that's why they play it how they play it. And so I'll try to be walking you through how each of these work, right? Uh, First, what I want to do, if you want to hear more about these things, what I would like you to do, please, 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 with the cherry on top. No, I'm just kidding. Go ahead, subscribe to this channel. That way you can hear more about it. I usually make at least one video a week. My work schedule has been killing me. I have been working 12-hour days, 6 days. This week was 6 days a week. So I'm trying to make a video here just to get everybody in tune. I pay attention to the markets every day of the week. While I'm at work, I'm still got trades going on currently. I have an XMR trade going on, making me money right now, and I'll show you how. Um, also, like the video. Why not? Just click like. It's a simple thing to do. Just click like. That'd be great. Also, if you think this video is going to be informative for you, share this video. Share this video with people that you know that are in the market, that you think that would be helpful for them, that you think that are deeply in the red. They don't know how to. They're confused on how to trade. They think they're doing the right thing, all the right things, and they're not. You know, like they're basically like if they're doing it, if there's a double top, and they're like, oh, double top, I'm going to trade at that triple top, and they go to trade, at that triple top to, short it, and then it goes above that triple top. Well, that's part of smart money. They know you're going to trade. They know you're going to short it. So what do? They do the opposite. They force it to go up. That way it screws the lower guy, right? So smart money knows how you trade. So they go the opposite way of doing it. Yeah, they'll let you. Okay, so what I say is there's this thing called the rat experiment, right? The rat experiment means that if you put two large rats into a large rat and a small rat into a cage, the large rat will let the small rat win 30% of the time so that it will keep playing, right? That's essentially what's happening here in these markets. Yes, you may win about 30% of the time uh, by doing the traditional way of technical analysis. The bear flags, bull flags, the harmonics, and all that stuff. But about 70% of the time, you're going to lose. And if you don't have a good stop loss in place, if you're not conscious about how much percentage that you should be um, wagering on these trades, you can easily get in the red really, really quick. That's how I became a negative trader and lost over $1,000 in my first year. Ever since then, I've gained money. I've gained. I'm not going to say how much I've gained, but let's just say my taxes this year sucked because I had to claim a lot of this on my taxes. So, without further ado, let's just go ahead and jump right in. First, what I want to do is I want to get into barchart.com. I want to go straight into TradingView. And we're going to take a look at the Bitcoin micros. All right. So, the Bitcoin micros are essentially what is on the CME market, and that is where everybody is basically placing their trade on the futures for Bitcoin, right? So on your first one, you'll see the most recent uh, contract. So it'll say BAN 22 July 22. All right. So as you can see, the volume here is right there, 9,720. Open interest, 7,700. 7,778. Quite a bit. So, there's a lot of people, and it says change plus 335. There's a lot of changes in all of these, to be honest. So, people are taking an interest in Bitcoin. I think they believe it has also hit the bottom. So, what you do is you click the actual contract, right? You sign. You can. The cool thing is that if you do sign up, it does cost money, but you do get a lot of good information if you do sign up. You can get like historical charts regarding like what is it? It's CPI, I think. Yeah, I don't know. There's just a lot of different things that you can do if you sign up with by paying for a membership here. I don't pay a membership here. I can find decent information without having to do it. But if you're one of those people that's full time trader, this is something I would suggest probably you know subscribing to, just because you can find a lot of good information. All right, so here we go. So it gives you a little bit of a context about what's going on. Bitcoin Micro, July 22. Here you can see um, average price and an average price chart for 5 previous July contracts. Now, July last year, if you don't remember, was a very, very bad month. That was when it was really, really low. So this year, even though we did get low, we didn't get as low as what we previously have been. Okay, uh, especially for the past 5 years. So the next thing I do is I go to the chart, right, where it says full chart in the upper right hand corner. I don't know if you can see my mark. Yeah, you can kind of see my marker. You go to full chart, you click that. And what I wanted to show you is what's called the commitment to traders report. All right. I'm going to change the candlesticks from open to close. Right, that way we get a little bit of color in here. And again, this is the Bitcoin Micro. So as you can see, it has dropped way, way down here. But as you can see down here, you see this is the open interest. So if I click on the volume, it'll tell you what exactly is what. So the volume, of course, is the red, green, or the blue. And you can make it wider if you want. You can make it like that. Open interest line. If you want to make it really, really thick, you can do that. Hit apply. All right. So now we go back down. Now we can see the open interest jump from June 17th or probably June 21st all the way up until now. Right. So people are, and you can see how green these bars are. So people are expecting a reversal at this point. And I don't blame them because this is where I thought it was going to reverse. And I'll show you just a second whenever I go to my own charts. All right. So now that you're here, what you can also do is click Add Study. I don't know if you can see where it's highlighted. It's right next to where you would change the candles. And when you click Add Study, what you can do is just type in COM. And it will be the first commitment to traders, not disaggregated, not financial, just commitment to traders, right? And what it's going to do, the first one is going to say commercial speculators. That's going to be in red. Commercial speculators are the large institutions. These are, I don't know how they consider it to be a commercial speculator. I believe it's a certain amount of money that they have in their accounts. So this would be, in my opinion, Chase Bank, Deutsche Bank, Federal Reserve. All these people are actually getting into Bitcoin, believe it or not. They're just kind of hiding it from you. Your large speculators, these are the up and coming, and these are new. Kind of like your retirement plans. I have one myself I have two actually, that are, incorporated with, cryptocurrencies. Some of them are mixed with cryptocurrencies and stock. Some are just strictly cryptocurrencies, whatever. They're kind of like your hedge fund people, right? And then you have your small speculators. These are people like you and me. That we have small accounts. We're not trying to do anything huge with it. We just have some. We're just in the game trying to see what's going on. All right. Whenever you click add, you go down to the bottom, and you will see the actual net of positions that each of these hold, right? So as this was going down, you can see the commercial speculators right here in the red shorting it, right? So now as it got to right here, back in May, after May, you can see they started longing it. And what did they do after they longed it? Boom, it went up. And now it kind of flattened off a little bit. They shorted it again right about the time. Boom, it shorted. Now they longed it. at the most recent point at 621, they longed it. So what does that indicate to you? If it's a commercial bank, if a commercial bank is longing something, more than likely they're expecting it to go up, right? And the same is happening with the small speculators. People like you and me, they're longing it too. They're expecting it to go up. Now, hedge fund managers, I don't know where their head is at. Well, actually, they longed it right here just before it started going up. So they longed it a little bit ahead of time. But once it did long, that's when they started shorting it again. Okay, and they shorted it they're shorting it right now. I don't know, again, I don't know where these guys are getting their information from, but it seems like the small guys have the right idea, and it seems like the commercial banks have the right idea. Hedge fund managers, I'm not so much. Okay, so this is to kind of give you an idea as to where the big banks are expecting something like Bitcoin to go, right? And that's why I always pull this up generally before I start looking at my main my main chart on Tradingview, all right? And we'll be going over Ethereum too. So let's go over to Bitcoin. Now this, I have this kind of in the way because this is where I thought it was going to have a reversal. Now, what it did is it dropped below where I thought it was going to do, and it touched a monthly fair value gap. Now, what is a monthly fair value gap? A monthly fair value gap, I went to weekly, oops. If you go to month, a fair value gap is going to be basically an imbalance in price. An imbalance in price means that it did not balance. Why did it not balance? Well, because the wick from the month of October, right, then you have the month of November that shot straight up. Then you have December, and the wick that came down. The wick in between December and October left an imbalance, right? So that is called a fair value gap. Now, even though it's monthly, and I'm sure during the days, during the weeklies, it was probably going up and down, it doesn't matter. The algorithm still sees that as an imbalance, and it's going to want generally it wants to come down and enter that imbalance, and it did. And that's something I saw, but I didn't expect it to get that low. Why did I not expect it to get that low? Was because the previous high was right here, and I expected it. There was a weekly also fair value gap in this area, and that's where I kind of expected it to get to. I didn't expect it to get much lower than the weekly fair value gap, just because it was just gonna get below the previous high, right, back in 2017. Right, I didn't think it would get all the way back down to 17,000, but that was my mistake. We all make mistakes, but this is the kind of technical analysis that you're going to be using as a smart money technical analysis, technical analyst, I should say. You're not going to be using trend lines or anything like that, because if you were, what would your trend line look like? Would you start here and go this way? Okay, if you did that, what happens all of a sudden when you get something like where it's at now, and it comes back down and tries to fill this monthly fair value gap, which it possibly could. Why? Because price tries to fill imbalances. That's what price tries to do. Price tries to do two things, right? It tries to fill imbalances, and it looks for liquidity. Liquidity is where there's either equal highs, equal lows, or you have a swing high, somewhere to where people would think they could put a buy stop and they think they could catch a breakout, a breakaway, or they put a sell limit on something to where they think is resistance, something like that, or they put a buy limit on something to where they think is support. Okay, so that's why trend lines to me do not matter. Trend lines are just phantom. If anything, they fake you out more than anything. Things go to a trend line and then they'll bounce off of it and then all of a sudden break down. How many people have traded off a trend line and it went the opposite way? Probably a lot of you. Okay, so that being said, I'm going to go back to the 4 hour. And the reason I'm going back to the 4 hour is because look at what's happening right now. You have, I should probably get rid of this to be honest, but it comes up and it touches this weekly fair value gap that I was talking about, and pulls back down, hits the bottom of the weekly fair value back, pulls back up, hits the top of the weekly fair value gap. Now the imbalance has been filled, right? Top to bottom, bottom to top. Weekly imbalance has been filled. So that tells us that now that the imbalance has been filled, it has the ability to move on from that imbalance. Now the question is it going to try to go down and fill the bottom imbalance, or is it going to try to run up this imbalance? My personal opinion, it's going to try to run up this imbalance. I think the bottom imbalance is too low. I think it has gotten low enough to where the commercials, if we go back to the Bitcoin micro, you can see that the commercials have already added their longs. So if they've already added their longs, or net longs, I should say, they're expecting this to go up, right? So if it did hit this and pull back, where did it hit? And why did it pull? And why did it start pulling back up again? Okay, so the answer to this has to do with what's called a bullish order block, which would be your last bearish candle before your bullish candles close above it, right? So this is your last bearish candle, right? And your order block would actually be the whole candle. So somewhere in between here is where it should stay within the lines. Closing, I should say, closing. It can, and it possibly could actually take let me do this instead. Could come up just a little bit more and then dive back down really quick, hit here, and then bounce back up, but not close anywhere below this line, right? And then head up above these equal highs. All right, so I put equal highs equal liquidity. And the reason I stopped right here, I don't know if you noticed, there is another order block right there. As you can see, the last bearish candle before the bullish candle takes over. But the thing is that this green candle right here pulled back already, touched the body of the bullish candle, and stayed above that. So that's what makes me think it probably won't pull back all the way to that level, but it possibly could. And if it did, it may pull down to about halfway into it. So that's one thing to watch out for. So it could pull back. However, I personally do not believe it will. Okay, I got rid of the, my reversal area. So now we have these equal highs equals liquidity. What does that mean? That means that your typical trader is going to do this, right? They're going to have a short position right along this area, probably with a short stop loss, right? Let me get rid of some of these other lines too. So as you can see, it's starting to move up on this 4-hour chart. So it comes up, bounces off, comes down, comes back up, fills up this imbalance. This is what people don't think about. They don't think about imbalances or anything like that. So now that it's filled the imbalance and it's starting to move back up, typically what happens is when you see this, it will come up and break this liquidity line. Why? Because then that will trip the people who have it going short, right? And then generally what it does is it will trick the people that have it going short, and it'll start going short again, right? And then what it does after that, after it starts going short, boom, it takes off the opposite direction, taking everybody who was thinking it was going short out. Everybody was thinking it was going to go short, and it turns around and they're going, oh, no, there's got to be another, resistance line or something like that. It's going to stay that way. They hold their trade, boom, they get taken out. Why? Because smart money thinks they're going to trade short, right? So that's what I think is going to be happening next. And the reason I have this fib upside down in here is because it's gotten up into what we call premium pricing, right? So the premium pricing is where you would normally short something, right? However, it's already done it here. It got up into the premium, which is where the 61.8 is, pulled down below the 50%, which is what it typically does, and then got back up into the premium. So once it pulled down back into the 50%, that is technically not discount. All of this down here is discount, but it's gone far enough to where they can buy this up right here and force it to go the opposite way and trick everybody else once it gets up to here and makes an equal high and then starts moving up. So that's what I would be on the lookout for, is for this to be continuously moving up. Now, I did draw a 4-hour fair value gap up here. This is what I would be aiming for, 24,500. That is the aiming point. Why? Because there's an imbalance on the 4-hour chart. If we go to the daily, let's see if there's an imbalance on the daily. Oh, yes, there is. There's a huge imbalance on the daily. Wow, is there an imbalance on the daily? Okay. So even though there's that 4-hour right there, especially right at the start of the weekly fair value gap. Now this right here, this rectangle here, that's where the reversed word is, right? That is where a breaker is. Now what you see, I put breaker plus. So what should have, in my eyes, what should have happened once it got down to that breaker is it shouldn't have gotten below that. And if it got to the bottom, it should have started moving up toward. However, it's not always the case of the breaker. Sometimes with the breaker, it'll get below it, close below it, and then it stays below it. And then it's hard. And then once it gets up to the breaker, that's when you'll see another rejection, right? And probably come back down to the top of the weekly fair value gap and then start moving up again. And then it'll run past the breaker. It won't even try to do anything inside of here. It'll be a quick run inside of the breaker or out, just through the breaker, right? It'll probably hit the bottom of the weekly fair value gap, pull back, hit the top of the breaker, and then boom, go back up again. Well, actually at the bottom of the weekly fair value gap is also where the 4-hour fair value gap is. So that makes sense. It makes sense for it to hit the bottom of the fair value gap or the bottom of the weekly fair value gap, bounce back off, come back up, and then you may see, oops, didn't mean to move that, and you may see a little consolidation, and then maybe a little bit of a pullback, and then boom, a jump up again, right? I'm going to get rid of this because That no longer exists. Well, I did that for as an example as to it could stay in this area for a little bit, um, as far as consolidation is concerned, because price does three things, and we call it the power of three, right? And that is consolidation, manipulation, distribution. So after consolidation, you will see a manipulation of the price. And then after the manipulation of the price, such as it falling backwards, right? So this is kind of consolidating right here. And then the manipulation would be it falling backwards, getting people to chase it. And then the distribution is for it to run up, right? That's what I see Bitcoin doing. Okay. We're going to move on to Ethereum. Ethereum almost is kind of the same, but not so much. But let me see here. Let's go to a 1 hour instead. So Ethereum has a breaker, and it's adhering to the breaker, actually. I'm going to get rid of this right here. Well, actually, that was a good breaker, too. Or not a breaker, that was a fair value gap. All right. I don't know if you see this or not. 1 hour fair value gap. And so what happened was that it ran, it ran down here into probably some kind of order block or fair value gap, whatever. It ran into it, ran up, and then it made equal highs right here. That's where these two orange lines are. And that's where I put liquidity. Oh, I got the stupid marker on. Okay. Now you can see where there's two equal highs. So it bounced back, and then there was another 1 hour fair value gap. What did it do? It bounced inside, just barely inside of that 1 hour fair value gap before it ran up into the next 1 hour fair value gap, running past these equal highs to where most people would short. But it did not short. Instead, it just ran right through it. So what did it do? Anybody that was trying to short this took them straight out, right? And this is what we call, and why I put IOFED, so what we call an institutional order flow entry drill. That's what happens whenever you enter a fair value gap and then it bounces right out, causing it to continuously move up. All right. So here we have the fair value gap, touches the top, comes back down, touches the bottom, comes back up, touches the top. Fair value gap filled, right? So what does it do now? Moves on up. All right. And now what it hit? A bearish order block. A bearish order block is where you have your last up candle before the next down candle closes below it, just like the bullish order block. So it comes up, hits that bearish order block, pulls back down into the 1 hour fair value gap. It knows it's already been filled. It doesn't have to stay. It doesn't have to, stay here and fill the fair value gap again. So what does it do? Boom, moves up, breaks this high, right? And it looks like it probably made it about halfway into that 1 hour bullish order block candle. Now the idea for this happening, right? For this happening right here. Idea for this is that right here, whenever this goes bullish and then turns bearish all of a sudden, is smart money buying, right? But buying just enough to get the retail traders to buy with it, right? So once they buy with it, then all of a sudden the commercial traders that have all the money sell. They sell all of a sudden, and what do they do to hedge against their sell? Well, they short it on futures. Boom. So they short it on futures after they sell, still making money. So they may have sold their actual assets, but they're still making money in the futures market. Make sense? I hope so. All right. So we have made it over to here. We have what's called, now the reason I have this marked out is because this is called a breaker. Why is it called a breaker? I could probably move this here, because you have a low, high, and then a lower low scenario. So whenever you have a low, high, lower low scenario, your last up candle in that high is going to be considered your breaker, right? So once you have that in your breaker, what's going to happen is two things could happen. It could come up, enter in the breaker, get rejected, and then come back down, possibly making even a lower low. And if that's if that's the case, then you have another breaker there. However, generally what does happen is that it runs right through the breaker, which is what happened here. And then once it runs through the breaker becomes support. Right? It's not two equal lines. It's not these two lines that make it support. Right? You see, I don't know if you see these two equal lows, some are relatively equal lows. That is not what makes it support. What makes it support is this whole breaker, this whole candle. So what could happen is that we could see, again, let me go back over here to path. We could see this pull back all the way back down into here, hit the bottom of the breaker, and then pull back up, right? So another reason that we could see that is because there are double lows. So these double lows are what people would think would be a support level. It is not a support level. The support level is the entire breaker, right? So it doesn't even have to pull back that far. It could pull back up to here. And why am I saying up to there? Well, because I see a bullish order block right there, right? So that bullish order block is your last down candle before your next bullish candles push up and close above it. That close is very important. A lot of people always want to throw out prices and this and that. You got to pay attention to the closes. The closes are huge. All right. If we go to the 4 hour, you can see the same thing on the 4 hour, right? Two equal lows. And then you have but the thing with the 4 hour here with this candle is that it is a very, very small body. Generally, with a bullish order block, it will have a thick body. Why? Because it'll have a thick body because the smart money will push it down really, really hard. That way the volume of that candle will be very large. If there's not a lot of volume, that means smart money is not really in the room, right? So it comes up and it hits the bottom of this. I mean, it doesn't even really hit the bottom of this. It just kind of comes up into the breaker, pulls back a little bit, touches the bottom of the breaker, and then just runs through. So that is kind of typical breaker behavior. But like I said, it could pull back, but then again, it doesn't have to. You do have, let me see here. If I am to put a 4 hour onto a fair value gap, it is right above where it stopped. So there are equal highs here. I don't know if you see it. There are equal highs just below this fair value gap. So that is making people think that this is a resistance line. It is not a resistance line. That means that there is liquidity just above it, meaning that people have their sell limits sitting right there. That is what liquidity is, because once the sell limit is broken for all the retail traders, the market is flooded with open interest, with money basically. That's when people that's when the time starts ticking for everybody's money that they had invested to go short. Well, now that line has been broken, the money is now pushed into the market, right? And what does smart money usually do with that? They take it. How do they take it? They go against it because people are usually shorting it, so smart money will jump above it. That being said, let's take a look at Ether micros. So we do have Ether micros here on bar chart. All right, the July contract. Let's see here what we got. Volume of 2. That is a very low volume of July, considering August and September. It looks like people are expecting Ethereum to make a move in September, which is interesting. However, the open interest is very, very high. This is a very, very odd sequence of events here, to be honest. So you got a volume of 3. Open interest means basically how many people have targets or limits that they have set, right? Volume just changed from 3 to 4, I think. So if we click on that, so somebody must have just now added 1. All right, so we go to full chart again. I'm going to go to study. Oh, it looks like COT is already in there. Okay, let's make, open. Okay, candlestick's already the same. Go down here. Look at this. Woof. I mean, this thing just takes off. I don't know why it just got deleted. But, it got moved. I hit the wrong button. Okay. So as you can see, and I'll look at all these green candles. So the volume has definitely increased a lot. And the the open interest has increased a lot. Volume for somehow has remained very little, which tells me that there are very few people, or a lot of people. It could be the opposite way around. Not exactly for sure. Very few people putting in a lot of open interest on this. So they could have multiple accounts, multiple bets, whatever you want to call it, on the same thing. Now, what's interesting here is that the commercial banks have been shorting this, and they have shorted it recently. So for some reason, the commercial banks believe that it's going to continue going lower. The large speculators believe that it's going to continue going higher. The small people like you and me, we don't really know what's going on. It looks like there's not much of a change, but it looks like they do have a net positive of 988. So it looks like the large speculators believe that this is going to continue going down, in my opinion, all the way up until, what was it, August, October is when we saw the change, or when we saw the most volume. So maybe that's what could be happening with Ether. Maybe they see other players in the game that are smart contract enabled, such as Avalanche. Trying to think some more. Phantom, Cardano. Maybe they think these players are going to come in and step up and start taking away from that market that is Ethereum. I personally don't believe so. um, until, and maybe that's their belief until Ethereum becomes proof of stake. I don't really know, but I do know that this was my area to watch out for, and if I go back to monthly, I did have an area to where I said, "Yep, area right here. Watch for a reversal." Now, it did get lower than that area than I thought it would be to watch for a reversal, just like Bitcoin was. Why did I think it was going to be that reversal area? Is because it was in between the high and also the body of the the body of the previous high back in 2018. So I thought it would probably come down, hit the body. Instead, what it did is it got into the monthly candle here that was the high of 2018 and then started reversing. So I do believe this is the reverse. Um, I think there was also a monthly fair value gap here, if I'm not mistaken. Yes. Okay. So maybe that's what it could also be too, is that we do have a monthly fair value gap that started here in December of 20. It had a huge run in January. And then February, a little bit of a run, which is interesting because I think this was the time, especially in February, when oh well, never mind. That was Bitcoin. I was thinking of when Musk announced about Bitcoin and Tesla and stuff like that. So I think a lot of the money was transferred over to Bitcoin and less so Ethereum. So you have this huge fair value gap that's happening between December uh, and February. So you have a January fair value gap, which leaves an open imbalance, right? So think of an imbalance as a gap, right? Uh, think of all this green as maybe not so much green. Maybe there's blotches here that that weren't green at all. Um, but because of the way this is charted, it looks green. So that's why sometimes it comes back down into those areas and says, hey, there's some parts in here that weren't filled, some prices that weren't hit. And price likes to come down and make sure all of those prices are filled, right? And since it did get hit all those prices, boom, now it's starting to move back up. And I think now we're really in reversal mode. So if we go to 4 hour, oops, didn't mean to move that. I should probably lock that. There we go. In here, you can see what I was talking about earlier. Take that run up because, or since the banks, the large banks are not thinking about this as something that could be growing very fast in the short term, this could be a consolidation. We could see a consolidation happening throughout the next couple of months before it actually takes off. Uh, or it could do what I thought it could do, or what I said earlier, and maybe jump even lower. I don't think that is a possibility, but there is a possibility for it to do that. I'm not saying it's a big one, um, especially if we go back to monthly. Didn't mean to move that lower low either. Okay. Jesus, why can't I just click on something that doesn't move? All right, there we go. I'm going to get rid of some of these arrows here. So it comes all the way down. It comes all the way back down into a fair value gap that has been weekly. It gets toward and it is within this large monthly candle here, right? So that could be a mitigation block. It is. Well, actually, no, it's not a mitigation block. It is a breaker. So if you see, well, yeah, breaker. Okay, because you got a high here. This would be the low, right? This guy right here. I'm going to draw it out for you. This will be the low. Stop it. So this would be the low, high, lower low, right? It does actually make a lower low before it comes back up. So this could be considered the breaker, and that's why it pulled all the way back down into here. It didn't have to get all the way back down to the bottom to be the breaker, but this maybe a whole month candle is your support. And that's why it came back down into it. It found a weekly fair value gap, entered it, and now that's why it's moving back up. All right. Watch again, consolidation possibly, maybe even going a little bit lower, but overall, Ethereum I think is going to be going higher. Now, XMR, my favorite. I love trading this one because it just makes me money all day long. I love trading it. This was I put this in here because this was my thoughts. As it got above the equal highs, I thought, okay, it actually would continue going higher, right? I did put a stop loss down around this area because this is kind of like where an order block area is. What it do? It come back down. It hit this order block area perfectly, and then turned around and bounced back up. And now what did it do? It got above the area that I thought it would, and it's going to continue growing. So I put a buy stop on this thing right here, and then I also put a buy limit right here. So needless to say, Monero is my money maker. I love Monero because it's to me it's easier to read, and you can just see where it's gonna turn around. You can see where it's gonna in here, and this is another reason why I thought it was going to do what it did. You have some basically almost equal highs. You have a high here. This one comes up to it, and what does it do? Fakes people out by going short, coming back up, shorting again. But where did it go to stop? If you look over here, you see two red candles before the green candle comes up and closes above it. That is your bullish order block. Well, not right there, but the wick. And I am on the 1 hour. So the 4 hour might be a little bit different. Might be a little bit more solid. All right. So comes down into the bullish order block, and then boom, reverses, comes back up, breaks these little, the swing high that it had a high, low, and here's the thing: we had a low, high, lower low situation. So what does that mean? It means we had a breaker, right? So the last up candle, which is right here, would have been your breaker. Boom, move that across. What did it do? Ran the breaker. Like I said before, that's what it usually does. It will run the breaker, and then after it runs the breaker, it sits on top and it acts as support. It's exactly what it did here. Acted as support. Boom, ran up, ran these highs, these somewhat equal highs, came to here, right? This would be another bearish order block. I think the red dotted candle was a 4 hour. So either or, it comes up to the bearish order block, either on the 4 hour or the 1 hour, whatever, comes up, bounces back just a little bit. Just a little bit. Just enough to maybe hit the top of this. Not exactly for sure. Yeah, well, hold on. Nope, stayed above it, but ran that high and then came back down into it. And then it ran above it, and now it's pulling back down, which is fine. I'm fine with Monero pulling back down. And the reason it's probably pulling back down is it might try to, well, because it made a couple equal highs. Here's some equal highs here. Here we have a daily fair value gap imbalance. So it has come up, hit the daily fair value gap imbalance, made some equal highs on the close. So that would be considered a rejection block, right? And I think that happened over here on this green candle. Pulling that all the way across. Look at that. Yep, that was a rejection block from this green candle all the way over because it ran up, hit the daily fair value gap, bounced back. Now Monero's pulling back down. It possibly could, and what I'm thinking it will probably do is that you have this as another bullish order block. So I wouldn't be surprised to see Monero come back down into this area right here, which is about 128. Yep, right around 128, maybe a little bit lower, 127.50, something like that, and then make a run back up. But you can see how hard it's running down. It's trying to get people to chase it because of these equal highs. It's thinking, okay, this is high it's gonna get. Not gonna get where. Let's watch it because it's actually getting to that point. And my phone just went off and told me Monero's dropping. Basically, watch. Look, it hit that marker that I was talking about. Hold on, I may want to add more to my position right now. Just did. Because if you didn't notice, did you see how hard that was pushing down? And then it just stopped. Why did it stop? Because that is a bullish order block. Because we had the red candles going down before the bullish candles overtook it. Now, again, there's a possibility that it could run down a little bit further. It is. It looks like it's running down a little bit further. But I do not see it. Actually could run down even further than that. It could get down into this point, maybe 125. But I doubt it. I have huge doubts about it. I may end it here and then maybe come back in a couple minutes and see where we're at. But nope. Okay, look. You can already see the wick starting to form. I'm on the 1 hour. Let me look at the 4 hour to see what it's doing. Okay. So there is no red here on the 4 hour. So it doesn't look like there's a bearish order block. However, what we do have is a breaker. I don't know if you noticed this. Again, here is, it goes from here, and you have this red candle. You have this low on this bullish candle, comes up, and then even though this may not be the lower low, it still makes a lower low here. That is the most important thing, is that runs down here. This is also a breaker here that I'm showing you here. So this is low, high, lower low. This may be the more important breaker, to be honest. And I think that's why it's pulling down into this area down here. Because this is the breaker, this would be the support point. And I just want to sit here and watch it for a second just to see what it does. And is my head in the way? I think my head is in the way. Okay, sorry about that, guys. Well, for my head not to be in the way, how about we do this? There we go. Now my head is no longer in the way. And now you can watch to see what happens with this bearish candle that's happening, that's dropping. Now, my position that I did add, lost, I lost a little bit on that. But in the end, I believe it's going to be worth it because I believe it's going to turn around at any moment. Okay, it's entering into the breaker now. Ooh, barely entered into it. And then we see a wick form. Okay, now it's entering into it a little bit further. Not further, but where that wick was. And actually, I want to take a look at the daily really quick while we're doing this. Oh, wow. Okay, never mind. Whenever you see a wick that comes down below a previous run up, right? So you have this run up, and then you have this right here. Okay, I'm gonna get rid of this completely. You see how solid this candle is, and most people will call this a Maribozu, right? This tells me that smart money is in play. Why? Because you don't get a daily candle like that doesn't have a top of a wick unless smart money is in the room. So maybe my analysis has changed. I am not 100%. I'm going to have to watch this really, really closely. I may have to short this actually because this right here, wherever you have a wick that comes below a candle that has a previous wick, it's what we call a redeliver rebalance, which basically means you could ignore this whole wick, right? Which means that we have a large fair value gap right here, is what that means. So even though this may be, I think, a 4-hour fair value gap or whatever it was, but it looks like it's going back up now, though. So never mind. But you can see how high it got today. And we're about about an hour and a half away from daily close. So we'll just have to wait and see. But it could come back down into this area right here. And let me give you the coordinates for that just in case. So in case it does come back down here, I would say put a long on this. Anywhere between 118 and 122. But I'm definitely gonna watch this closely to see if it does pull back down into this area. Yes, phone. I know things are going different. Okay, so Anyway, we can't watch this all day. All right, I don't want to get you guys all bored and you know turn off this video, even though it's already been an hour. Jesus Christ, it's been an hour. But hopefully, this was very informative for you. Uh, I hope that you didn't get too bored, and I hope you learned something. If you did, again, please do something for me and share this video with as many people as you can. You know why? Because I'm a great host. I'm like the most coolest technical analysis person out there. I'm telling you, that Tom Crown person, he ain't got nothing on me. No, I'm just kidding. I like Tom Crown. He's a good guy. He just goes by your regular technical analysis. I'd like to get into a conversation with him one day, but that's neither here nor there. But if you could share this video with your people, again, one more take a look at the chart. We'll see what happens, and if something does happen, I'll try to give you an update. How about that? But until then, thanks for watching, and I shall see you guys later.